The main cause of bad news over the past year has been uncertainty. We don't know how high inflation is going to go, so we don't know how high interest rates will go. And so we don't know how low real estate prices will go. Now, here's finally some good news. We are seeing more certainty from all angles recently, and this is ultimately going to bring more confidence back to real estate. So in this video, let's dive in and see what's been happening. But before I continue, if you enjoy content like this, don't forget to give this video a thumbs up and subscribe to our channel so you can see more videos like this made specifically for real estate investors in Toronto. It looks like all those rate hikes are starting to kick in. It started last week with the US CPI coming in lower than expected. Headline CPI was at 7.7%, down from 8.2% in September and lower than what was expected at 8%. Core CPI, which excludes the more volatile food and energy, came in at 6.3%, lower than September's 6.6% and lower than expected at 6.5%. Then, earlier this week, the US PPI, the Producer Price Index, also came in lower, really reinforcing the same themes. Now, Morgan Stanley just released an updated economic outlook, and they dare to say that the US CPI will get to under 2% by the end of 2023. They're expecting demand to be weaker, and that we'll start to see supply chain improvements, and shelter, food, and energy prices will start to stabilize. And all of these things will lower inflation, which does give our central banks room to slow down rate hikes. In fact, they think that the Fed will stop raising rates once they reach 4.625% in January of 2023, and they're currently at 4% on the US side. Now let's look at our side of the border in Canada. Fresh off the press, we have our Canada CPI also released this week, also coming in as expected. Core CPI is what the BOC is monitoring more closely right now, and that's finally coming down a bit. Energy, clothing, and shelter costs are still rising, but food prices are moderating. And since most people expect shelter and energy to moderate into next year, these are actually signs that rate hikes are starting to kick into effect in Canada too. We know that the BOC certainly thinks so since they did lower inflation projections, and all of these things are causing bond traders to shift their interest rate expectations lower too. 5-year bond yields were at 3.8% just last week, but have since fallen to near 3.3%, and that's a 50 basis point drop in just days. And interest rate expectations are also converging. The big banks all had different ideas of where interest rates would go just a few months back, and it was also different from what the bond traders were expecting. And now it seems like things are aligning much better. Right now, the bond market expects us to peak at around 4.25% by the first half of 2023, and big banks seem to have a similar idea too. Now, don't get me wrong, I'm not saying we're done rate hikes yet, but the expectations are certainly getting to a better consensus. Right now in Canada, our policy rate is at 3.75%, and we might see another 25 to 50 basis points rate hike in early December. And at that point, we would be between 4 to 4.25%, which is close to where our current projected peak should be. The end result is that things should continue to stabilize for Toronto real estate. Sales have been stable for 4 months now, and new listings are also stabilizing. So these forces holding strong isn't giving much room for prices to budge since July. If you asked anyone what a property might be selling for just a few months back, it really would have been a coin toss because expectations were all over the place. But now I am happy to announce that prices are becoming much more predictable in recent weeks. But also because interest rates aren't really going to come down anytime soon, we don't expect prices to come up that quickly either because the market overall can qualify for 25% less than before. However, stabilizing conditions will bring buying confidence back, and there will be more buying action and faster recovery in certain markets. Here's what we expect. First, a lower price ceiling will mean investment properties with lower price points will get more action. Think starter 2-unit houses instead of larger multiplexes or luxury end-user homes. Next, higher interest rates will mean a continued investor preference for properties that do cash flow at 5.5% interest rates. So unfortunately, this does mean condos that cash flow pretty negative these days will have weaker holding power, and the combination of more listings coming up and less investors buying will mean that the Toronto condo market probably won't do as well. And finally, there will be a preference for markets with higher growth potential, and that's when you really need to keep an eye on housing policy. With the Ford government investing more in developing low-rise neighborhoods with more density and better transit systems in place, we expect houses in Toronto to continue to outperform the overall market. As we head into the holiday season, we do expect real estate activity to slow down, and that's going to cause a seasonal slowdown, even though things are picking up as a whole. So what this means is that if a good opportunity does pop up, you might probably see less competition and end up snatching a deal. So if you are ready and you want to see what deals are out there, just reach out to our team. We're a real estate sales brokerage that focuses on investing in houses and multifamily homes in Toronto. When you work with us, we take the time to understand your needs, teach you the ropes, show you the deals, crunch all the numbers, and eventually help you buy the best one for you. But that's not all. Our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.